Hey everyone, it's Ed Kime from over at Quantcha, and welcome back to another day of the Quantcha Challenge. As always, we invite you to check out our unlimited commission-free stock and option trading offer for just $99 a month. That way you get all the commission-free trading you want, as well as Quantcha's web tools, and you get to go out there and take on the market the best you can. And so far, we're having a good day. So, where we left off yesterday, I talked about wanting to get in on Symantec for an overnight calendar strangle trade. Actually, a calendar straddle. Um, I want to talk mostly about that one, but we'll get into that in 1 second. In the meantime, I just want to cover real quick where the portfolio happens to be right now. We've got this AMD trade, which is just some leftovers from a very profitable earnings trade we did. We're letting those expire and kind of work their way out. It's just cheaper than trying to close them. We have the Carnival trade where we're bullish on. They're still pretty far in our favor at this point. We're just burning off some time value. We're not going to mess with them yet. Today we're not going to really make any trades at all, actually. Um, Next, Microsoft. We opened up yesterday. We sold a put. It's going down, but it's just going down. I mean, I'm not worried about it. We've seen Microsoft fluctuate up and down. If it breaks below 100, I'll be a little worried. But at this point, I'm just looking at this as some way for us to collect some premium going into what will probably be a rebound and then a dividend after that. Micron is way up over our strikes here. We were bearish on this trade. It's been a complete loss so far. We're just letting it sit because it's cheaper than trying to close it out. And then finally, Nvidia has just been a workhorse. It was actually up over $2 a share earlier today in the 146 range. It went down. It died on us. We're waiting for it to come back up, hopefully in the next 7 days. We'll see what happens. At this point, we're pretty happy to be able to get anything out of it because I had personally written it off. Now, that being said, let's take a look at perform. Actually, let's go to we closed out a bunch of positions yesterday off screen. There was no need to sit there and see me go through one by one and close out like Exxon and some other stuff we had. I'm glad we didn't stay involved in those, but I want to talk about Symantec, which is a trade we opened up. Um, and let me only select this one. We only want to look at this. So this is a pretty complex story. As you can see, two trades that are logged, one entry yesterday, one entry today. These are actually part of the same trading and strategy effort. And I'll try not to go into too much detail, but this was a bear to take on. We took on the market. We actually got the better of it. We had a total investment of about for the original investment was about $850 or so. So we more than doubled the money overnight. But this was a very fortunate and lucky trade for us. And I'll show the 1 day as a point for it. What we tried to do originally was to open uh, a calendar straddle. So we were going to sell the straddle for this week, buy the at the money straddle for next week. But Symantec's option liquidity is terrible. It is even under earning circumstances going into it when there was high open interest and volume. The spreads were tough, and there really wasn't as much market participation as we had hoped for. But we were still kind of able to fight our way in. But what I did was it was really, really hard to get any good deal on this straddle as together. So I went to open it leg by leg and to leg in by buying the longs first and then buying the shorts. And just as a quick lesson, pay close attention to the trades you make because I actually messed up on this trade and got lucky that it didn't burn me. I had a partial fill of 11 contracts when I was buying the calls, but I misread it as a partial fill for the puts. So I canceled. So I went in and I basically replaced my put order, or I thought I was canceling the put, I should say, in order to buy back the remaining 29 I needed. The end result that ended up happening was I had a put order for 40 that filled. I bought another 29 to fill it out, and then I bought this one separately. So there was actually like just opening it up was like 6 or 7 different trades in order to get everything lined up. Because you have to leg into the longs first usually because I mean, I don't have the margin on hand to be able to support going short 69 call or 40 calls and 69 puts for this particular stock. So anyway, we had this weird kind of lopsided straddle going in. And then our biggest concern was we were going to see a lot of movement. As you could see overnight, I mean, it closed, or actually we're looking at Micron right now. Let me actually reestablish this. SYMC. So this will give us the chart we're looking for here. And yesterday it closed around 21. This is actually this pre-market where it was up quite a bit. But it closed at like right on the button at 21, which is where our strikes were, which was awesome. The problem was then it went up like 7% after hours, and it was pretty clear it was going to open around 2250. Now the problem with 2250 is when you have a calendar straddle, you're hoping that the net when you end, the time value you have in the end is going to be more than the time value you paid for to open the trade. And I know it's kind of a complicated sound, but the whole idea is saying you want to lose the time value on the short options faster than you lose them on the long options. This way, in the end, when you close the trade, you make a profit. However, this was pretty clearly not going to happen. When I started looking at the options for around other expirations and for other stocks that are peers of the volatility and pricing and so forth, it was pretty clear that we were going to get destroyed on liquidity and we were going to have to leg out of the trade. So I ended up kind of doing a little bit of gymnastics, and this I don't recommend. It was dangerous in hindsight. It worked out really well, but I was up this morning when the market basically when the market opened, and the first thing I saw was it dropped a bit, and it dropped down to around 22 and change. And so when it settled in here, what I did was I rolled a put. I ended up rolling the short put that we had, which was now pretty far out of the money. It was $1.50 out of the money. It was almost worthless, and I rolled it and I replaced it with these 2250 at the money puts. And the idea at the time was I wanted to roll them up this way as the stock moved up, which I had high confidence it would. We'd be able to burn off some premium on this to offset the fact that we were losing everything on the long puts we were holding. And so it started moving up, and it just caught a bid as was expected. And as soon as it broke 23, while I was in here when I sold the put, I also did something super dangerous, which was I bought back to close the call we were short. So at this point, we were short a put spread that was bullish, and we were long calls. Long story short, it got up, it broke 23. I decided at that point to just cut it, get the gains we could. I really wasn't sure how much we were going to be up because it was tough to track, but I also didn't want to sit there holding on to several $1,000s in calls. In this case, when I sold these calls, they were worth about 8 grand. I didn't want to hold on to at what was at the time about $8,000 in calls and a $26,000 account, and then have them just drop. And they ended up ultimately coming down a bit as the days gone on. They've kind of settled in here. But had we waited out or had we done any of that other stuff, we probably would have lost money on the trade. Now, I definitely would not advise doing this, but at the time, I felt like it was strong. And frankly, I was a little bit frustrated because of the fact that I got the worst end of every single transaction. In this, every single step of the way, opening and closing, the liquidity was so bad that I was well on the wrong side of the midpoint. If it was, sometimes the spreads were 60, 70 cents wide. And even when I sold these calls later in the day, in order to close out that position, this was still, this was for less than the intrinsic value. Because they know I'm not going to exercise 40 calls. So that's kind of how they get you. But at the end of the day, we were able to pull out a nice $900 return. That brought us up. Now, at this point, we're comfortably positive for the 3 weeks we've been in. We got the $99 hit against the account for the Quantcha Unlimited this morning, since it's February 1st. But all in all, we were up about $800 gross prior to transaction costs. And I'm going to add another video later on that goes through the transaction costs that kind of breaks out what happened and what you might have expected if you went with other platforms. The good news is we made as much money as we could have for, I believe, any retail offering that's out there right now. When you combine the tools and the availability of what the platform enables with our commission-free option, we did really, really well. So I'm going to kind of seam it off there. We're not going to place any other trades today. It is in the last hour of market on Friday, so we're just going to kind of sit back. There's nothing we have to worry about. These options are going to expire very easily. The rest of it is at least next week or further. And right now we're just kind of chilling. There isn't a lot of movement that can happen. The only thing that can really move on us now, Microsoft could go down a little bit, but there's not that much to drop. I don't anticipate a huge drop. And then Nvidia, hopefully we see them continue to move up. But even if they just kind of stay where they are, maybe early next week we close it out for less of a loss than we could have potentially had otherwise. But I'm going to cut it off for there. Hope everyone else is having a good day as well trading. And as always, good luck and good hunting.